Off to the races with a good start for the week. Stocks held in despite a tiny little fade in some of the big tech stuff today. Russell did very well despite bonds selling off. Sometimes the Treasury sell-off can get in the way of that value-style rotation embodied by the small caps. We're seeing plenty of risk appetite and animal spirits. Let's look at the risk radar where I left it last week. A lot of green on here. Stocks, even though they went sideways, still holding on to the important range. Bonds red, dollar green, which I had to shift to get in line with bonds red, meaning that the trend is downward in price for bonds, again, upward for yield. And then the green light on crypto as Bitcoin now looks to be using its old top of the downtrend as new support. That is a very bullish technical event. Let's go through some of the charts real quick. Number one, the simple one, is the MAGS 7. This is the key to the whole market, essentially. If you get the higher high, the relative strength is building up in the MAGS ETF from Round Hill, which is just the MAGS 7. If that thing breaks out, then, what else is there to say? These are the most important companies in the world. And it looks like some of the AI stuff is finally falling into place with some of the devices actually and products getting launched and tools. But let's see the reception to Apple's AI. That still remains the one stock that I'm a little bit dubious on, given that it's at record valuations and the ascending triangle in the Apple chart portends volatility in some direction. Let's hope it's upward, and then we can just assume business as usual. Now, bonds also mean business, and the dollar holding on to strength, too, suggests that we should probably start thinking about some different scenarios for the Fed beyond just cuts, or at least stair-step or patience. I think there's a possibility here that the 25 bips in November might start to drip out a little bit if yields in the dollar keep climbing, if the data this week are solid. But this is the week that will determine that. Right now, the market is set 100%. Fed's going to cut 25 the day after the election. That's kind of a big date on the calendar, especially considering the hurry with which these assets have been moving. So if data come in hot this week, that could be some problematic volatility if the 10-year starts pushing more towards like 4 or 5. But again, that's something that you would think would run second in rank of importance to the S&P and the NASDAQ compared to the big tech earnings. The bond story could be a major issue for the Russell and the rotation trade, but today there's a lot of confidence suggesting that we're going to move through it, and that's where Bitcoin comes in. Because when you've got yields going up and the Russell up today like it was, and crypto going up, that is starting to get into some frothy territory. The baseline framework that I'm working off for Bitcoin is that it does look like we're building up potential energy to be realized in a breakout, but I still am also hesitant to believe that this will carve out a whole new trading range. That's because there is still a longer-term bearish divergence. Since the first time we explored the 60 to 70,000 range, we keep getting stuck in it. Will this be the one that launches us into a new range of trading? That's the great question for Bitcoin. I'll become convinced when the RSI makes a higher high. Have a great night.